I wanted to just take a beat with hedge funds here because as we see this rotation, and particularly at a momentum in tech stocks, you wonder who's finally going to be a winner and who's going to be a loser in the hedge fund industry.
That's right. And as we know, hedge funds have been struggling of late broadly. And one of the things to note is that hedge funds have the highest equity exposure compared to the last decade that they've had, because a lot of hedge funds have essentially had to go long. So like you said, Alex, a lot of hedge funds, in order to get the gains they need, they've gone into tech stocks, they've gone into Facebook, they've gone into Amazon, and they've ridden those gains like a lot of regular investors have in passive index funds. But now you're seeing things roll off, and that's where they're getting caught in some concentrated bets there.
Interesting. And you also saw David with Pierre Anunrand. He's an oil hedge fund guy. He's been bullish for a long time and just kept getting hammered. Guess what? He finally had a good month.
The oil price did go up after all. That sort of helps,
15%,
right? If you're long oil,
15% in a month. That's pretty good. Yeah, the best in 4 years.
That's right. And we did have two marquee hedge funds close in the past week, I should note. We saw Highfield Capital up in Boston, John Jacobson's fund close. And also just yesterday we broke the news of another hedge fund closing, Tourbillon Capital. So you're seeing some of these hedge funds that are struggling to make money actually decide to return money to investors.